everyone, my name is Mary Redmond and I'm talking about the pound Australian dollar today, and I like this for a quick move to the downside this week, possibly even before the UK announces their GDP growth. And the reasons for this are primarily because it's still in a very strong downward trend, both on a monthly and a weekly chart. And the Australian dollar has really been on a tear against all currencies. And I think we're probably approaching what's going to be, in the next couple of months, the end of the phenomenal bull run in the commodity currencies, because a lot of this is due to the Federal Reserve's QE, all the money that they've been pumping into the market. It's $600 billion over the last 6 months. So when that stops coming in, it's really anyone's guess exactly what's going to happen. But it's had the effect of weakening the dollar and boosting commodities. So for the time being, the Australian dollar is extremely strong, and the time to take advantage of that is usually on days when the stock market is down and there's a spike up in volatility. And if you look at the volatility index, the VIX, over the last 6 months, or really over the last several years, every time there's been a big spike up out of the VIX's normal trading range, it's been a very good time to buy the Australian dollar. And the old saying in the market is, when the VIX is high, it's time to buy, and the VIX is low, it's time to go. Well, the VIX is near multi-year historic lows, and there are a lot of reasons for that, partly the quantitative easing. But the fact is, we did have a little spike up today. It's not a very big spike, but it might be significant enough that the commodity currencies would rebound. And also it has to do with the fact that the New Zealand Central Bank is also having a meeting this week, so sometimes the Australian dollar responds to that. But you do see that, for instance, last Monday we did have a spike up in the VIX, and here we have a spike up in the VIX. And for a variety of reasons, those generally have turned out to be good times to buy the Australian dollar for a pretty good trade. So I'm thinking that probably the British pound may just not respond very much to the UK GDP growth figures, unless they're much higher or much lower than expected. And it's very difficult for any economy to go from a contraction to a very strong upward growth rate within a matter of a few months. So if it comes in at or slightly above, slightly below expectations, it might end up being a non-event. And in which case it's still better to just go with the trend with this pair until it bottoms out around $1.50 as it did before. So that's what I'm thinking for this particular pair for this week, at least for the next couple of days.